Hello everyone, this is Sebastian McMahon from IA Financial Group and I'm back with the weekly review, this time for the week ending May 31st, 2024. So an historic week because for the first time in history, we have a president or an ex-president that has been found guilty in a criminal case. So this was the verdict we got on Thursday night, Thursday late afternoon about Donald Trump. We were a bit surprised, I would say, about how quickly the deliberations converged towards a guilty verdict, but now we need to look at what's next. And it's not clear what's next because if you remember in 2016, when the Access Hollywood tape came out, Mr. Trump's polling numbers fell instantly, but after 3 weeks he was polling stronger than before because he was able to rally the troops around this event and around his message. So will we have something like this time around? It's very hard to tell. Trying to read everything we could before recording this review here. The consensus seems to be that maybe it gives an advantage of 1 point to Mr. Biden. So in a very tight race, maybe that's enough to put him over. But when you look at polls, it's always very important how questions are asked and how the question was framed about, well, if Mr. Trump is found guilty, are you more likely to support him, less likely? Well, what does that mean? Does that mean that you will have less of a conviction but still vote for him, abstain for voting? Will you switch your vote to Mr. Biden? What are you going to do? So this is what's hard to gauge right now, and we will learn more as the polls continue to progress and this political campaign, this election campaign takes more momentum over the coming months. So maybe if we can go to the data for the week. So the returns on the markets that closed on Thursday, lots of red on the screen. Markets seem to be losing faith that the Fed will be coming in with rate cuts by the end of this year. Interest rates higher, bonds suffering, stocks are also taking a pause, negative week. Oil higher on the week. Gold also. Gold is volatile between 23 and 2400. But positive on the week. Canadian dollar lower, euro lower versus the US, so stronger USD. So maybe now just again on the Trump file, I said most of the important stuff in the opening, but the sentencing date is set for July 11th. So for now he's been convicted, but we don't have a sentence yet. There is a possibility that Mr. Trump goes in jail. I would say that it's a very low probability. Pretty much every expert seems to agree on that. Might likely will have a probation and or a fine or something like that. But jail is not the highest probability outcome. This will not prevent him from running for president, because when you look at the Constitution, you need to be born in the U.S., you need to be a U.S. citizen, you need to be 35 years or older and have lived in the U.S. for 14 years. That's it. So you can basically be in jail the night of the election and still win the election. So that doesn't prevent him from running for president. And of course, there will be appeals to that. How long will the appeal process take? Will it be settled before or after the election? So this will be, dominating the rhetoric and the campaign for the next few months, for sure. So if you want to learn more about our take on the election, more importantly, the economic impacts and the financial impacts of all of that, we did write a piece on the monthly for April 2024. It was trading around Trump 2.0. The link is on the bottom. You have a screenshot of the first page on the left, and on the right, maybe just the conclusions of that. So we were looking at four main axes that are on Trump's platform: repeal or watering down of the IRA, so the Inflation Reduction Act, the subsidies for clean energy and clean infrastructure, trade tariffs, tax cuts, and NATO pressures. So winners and losers. So on the loser side, the word bonds appears more often on the loser side than the winner side. So Trump 2.0 could be inflationary, could also be targeted towards pushing real growth and nominal growth higher, so negative for bonds. Equities, it depends on the measure, I would say. Canadian energy could benefit from a watering down of the IRA. Some investments could come to Canada based on that. Trade tariffs, of course, it helps the US dollar, US healthcare, US small caps. It's a detractor for pretty much everything else, but anything that is very centric to the US could benefit if we go into the trade tariffs situation. Tax cuts should be supportive for equities, cyclicals, but negative for bonds and for defensives. So there's a lot of there's many scenarios here, many things to consider. So I encourage you just to take a look at this piece. I think it covers pretty much the basis, the most basic elements, and also what it means for Canada. So I just wanted to point this out. So looking at the Canadian data for the week, GDP growth is missing expectations again. We had the 1.7% growth on the quarter. Consensus was for above 2%. Bank of Canada was thinking that we would see 2.8% in Q1, so we're way below. The domestic economy is doing okay. It's mostly the overhang of inventories that we've been drawing from. So consumers are consuming, investment continues to be strong, but not as much production, and GDP is gross domestic production, because we had this overhang of inventories. So there's that for Q4 2023. The initial number was 1%, now it's pretty much flat. So you see that we're kind of lacking momentum here. And on the right, GDP per capita, well, it was negative. And if you look at the last few numbers, 4 negative, 1 positive, 2 negative. So you see the trend here. So this number pretty much confirms that next week it's necessary for the Bank of Canada to start cutting. If not next week in July, but we'll be really listening to the language. Whether they cut or not next week, we'll see. But what's going to be more important for the markets is the language. Are they, if they hike, if they cut, sorry, we've been talking about hikes for so long. If they cut next week, will they announce, will they talk like it's like a one and done, and after that we're going to be very careful about cutting again? Or will they be speaking like, all right, this is the first cut of many? If they don't cut, likely they will be flagging July, but will it mean that, well, a bit later but faster? Are they careful? So this will be the important part. We do think that we should see a cut next week. Market is pricing in about 80% odds, which is somewhat fair, but we think it should be closer to 100%. But if we don't have a cut next week, it's going to be in July. But again, how quickly after that is what will be moving the markets. Speaking about cuts, next week the ECB should also be cutting on June 6th, so on Thursday. So Bank of Canada on Wednesday, ECB on Thursday. The ECB pretty much announced its intention to cut, so it's not going to be a surprise. They should be cutting, but it's not going to be on autopilot. This morning we had some inflation data from the ECB, and what you see on both charts here, well, so on the left first, total and core just reaccelerated a little bit, just enough to keep the ECB on its toes. And on the right, you see like Italy, Germany, Spain, France. A few of those countries are seeing inflation flaring up again. Maybe it's a short time thing. Maybe it's about commodity prices that are starting to react to this reacceleration of the manufacturing cycle. But in the second half of the year, we should be seeing inflationary pressures coming from the global economy being a little bit stronger. So even if the Fed is on the sidelines, things are starting to move, but that doesn't mean that things will start to get on autopilot anytime soon. So what we'll be watching next week, Bank of Canada, already covered it. Net change in employment. So last month we had 90,000 jobs, very strong number, but was not enough to keep pace with population growth. So we'll see what we get this month. In the US, manufacturing services PMI should be a bit higher than last month, and non-farm payrolls should be also stronger at 185,000 in May. So that wraps it up for the week. If you like the content here, don't hesitate to share, and of course, please come again next week.